Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the market for the week of the 23rd until the 27th of May. Now before we dive into the webinar, the key highlights of the week were the earnings reports of Nvidia as well as Dell as we drew close to the current earnings season. As always, please note that all of the ideas discussed in the webinar are my own opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So, looking at stocks, as we mentioned, we basically drew a close to the current earnings season when it comes to the US markets. We didn't have Nvidia and Dell reporting the figures over the course of last week as part of the last few companies having their earnings results for this season. So looking at Nvidia's report first, Nvidia released the earnings on the 27th. The chart, we're going to switch on to the daily time frame. Nvidia released the figures on the 25th, after the market close, where it beat both the EPS as well as the revenue estimates. And on the 2 days following the report, Nvidia rose by almost 10% or $16.15, which is a testament of the impact that the earnings report can have, at least in the short term. We can pretty much see here how the price has gapped up after the day after we had the earnings report, and on the 2 following days is by how much basically prices rose. So we can see here it was trading, it opened lower actually the following day at 167 more or less, and it's currently sitting $20 higher. The next stock that we mentioned was also Dell, and just like Nvidia, Dell also beats both estimates, the EPS and the revenue estimates, and it actually had an even better day following the report. Now they released the figures on the next day, which was the 26th after the market closed, so we saw the impact on the 27th with the open, and we can pretty much see what kind of impact it had after it beat both of the estimates. Prices surged by a strong 14.7% or $6.47. Of course, we did pull back down from the highs slightly, but we can pretty much see the size of the gap up that prices made with the open. Of course, with the prices that are going to fill the whole gap or not, it's a different story. But if we switch on the weekly time frame, we can see that it's basically breaking somewhat of these swing levels right here. Obviously you cannot really see them on the weekly, so maybe better to stick on the daily. So we had this key structure level here that we broke above, and we're actually retesting it now. So if it holds, we could potentially see prices filling the full gap all the way up to this level, which is $54. Next up, moving on to Forex, the dollar index dropped for the second consecutive week in a row. I'll just switch onto the dollar index chart so you can also have a look into this, and we'll keep this on the weekly time frame. You can also see the arrows where it's making the measurements. So as we said, it dropped for the second consecutive week in a row, bringing the tally to a decline of 2.67%, as you can see here, over the course of the past 2 weeks. Now, part of the reason is probably the fact that the US missed its key GDP data on Thursday, which in the short term may have overshadowed the fact that the FOMC hinted towards an even more aggressive rate hike cycle than what the market anticipated on Wednesday. Some of the key movers against the dollar index, or the US dollar, were the US dollar Swiss franc. So let's go back on the tixee web trader. I'm gonna pull up US dollar and Swiss franc. So this specific currency pair, it dropped by 1.8% on the week, or $4.44 sorry. So just switch onto the weekly time frame so you can see the size of the drop. And we can see the drop that it has posted over the course of the last 2 weeks here. So we're pretty much, it made this rise, if we count, it was like 5 weeks rise, and within 2 weeks it has already taken back 3 weeks worth of the price surge. So you can see here these three candlesticks are pretty much overshadowed by these two weekly red candles, which is coming all the way back down here and dropping down below the 1 mark. Another key currency pair was also the pound dollar as well. Now this one has risen by 1.24% on the week, or 3% over the course of the past 2 weeks. So you can see pretty much how these currencies are pretty much taking advantage of the fact that the dollar index dropped. And it's not just these ones. I mean, if we look at all the major pairs, so we can see the Australian dollar, US dollar also rose, the Kiwi dollar as well, Euro dollar as well, pound dollar we already discussed, as well as the US dollar Swiss franc, US dollar yen as well dropped, and US dollar Canadian dollar. So you can pretty much see across the board of the currency, the major currency pairs were stronger against the US dollar. Moving on to oil and gold, we haven't really had any major headlines with regards to oil, other than the fact that the weaker US dollar potentially helped push its prices higher. We just pull up briefly the chart as well. The prices crossed above the 115 mark earlier today, as you can see from the price chart itself as well. Now, the ban on the Russian oil imports by the EU is still currently on hold, although it was initially projected to be materialized by the end of the year. Prices only rose by 0.84% or 0.96 $0.96 over the course of the week. We also had a similar situation looking at gold as well, with gold prices basically only rising by 0.14% or $2.51, as we can see right here. We're getting somewhat of a bounce from this area here. Now, whether it's gonna hold or not, it's obviously time is going to tell, and any remarks that we may get with the additional rate hike cycles coming from the US is potentially going to be impacting gold prices as well. So next week, we're also going to be having the NFP report. We're also going to be touching on that on the outlook. So definitely stay tuned for that one, which again is obviously going to be impacting commodities such as oil and gold as well. And yeah, there you have it as far as the look back and review for this week. I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.